the midst of the COVID-19 pandemic. The country was reeling. Businesses were closing, and the U.S. faced the threat of massive unemployment. Congress responded and passed one of the largest programs to help small business in U.S. history, eventually totaling $649 billion. And it was passed with bipartisan support. Even more surprising, it was passed in record time. Literally weeks, not months as such programs often take. It was called the Paycheck Protection Program, or PPP for short, and was part of the massive CARES Act of 2020. Over 5 million small businesses and self-employed individuals out of the nation's 31 million ultimately got the low-interest, forgivable PPP loans offered under the program. For many, it was a lifeline to stay in business. But when you're talking about billions of dollars in government money, temptation invites the unscrupulous. Crooks, fraudsters, or misguided people who see easy pickings. And the PPP program was no exception. Some bad apples tried to bilk taxpayers of over $341 million in PPP funds. And you won't believe what they spent the money on. Be prepared. Some of the stories are so brazen and the PPP fraud so blatant, it may shock you. The Paycheck Protection Program had a simple goal: provide forgivable loans to small businesses in exchange for keeping employees on the payroll during the COVID crisis. Those who followed all the program rules could later apply to have the PPP loan forgiven and not have to repay it. The vast majority of the 5 million PPP loans are legitimate. Most business owners did nothing intentionally wrong when they applied. But that doesn't change the fact that some people tried to game the system and were indicted on various charges that include up to 20 years in prison. Charges like bank fraud, money laundering, wire fraud, identity theft. Together, those kinds of crimes make up PPP Loan Fraud. Fewer than 150 individuals have been prosecuted to date. That represents a minuscule percentage out of the 5 million who applied and got PPP loans. So the numbers suggest that overwhelmingly, the PPP money got into the hands of those it was intended to help. But authorities say a tiny number of people, and it is a tiny number of people in comparison, had larceny in their hearts. They took advantage of a national crisis and are now charged with CARES Act fraud. As one U.S. attorney in the Justice Department put it, the CARES Act and the PPP designated funds to aid struggling businesses during a pandemic. American businesses use these funds to help keep their companies and employees afloat during this unprecedented time. Scammers, on the other hand, seek an easy payday. PPP loan fraud is a federal crime. But couldn't some of these cases be honest paperwork mistakes? Hardly. In each case, the Department of Justice alleges outright lies. Prosecutors say some defendants invented fictitious businesses that didn't even exist, then claimed they needed the money to operate them. For example, one Walmart manager conjured up a company and filed loan applications a day later, even though the rules clearly stated the business had to have existed before the pandemic. Another took character names from the HBO series Game of Thrones for his fictitious businesses. In almost every case of PPP loan fraud, the defendants made up fake employees, thousands and thousands of fake employees. One PPP fraud defendant found a random name generator online to create fake names. Some falsely claimed family members, past employees, and complete strangers as current employees. When investigators interviewed the supposed employees, it was a big surprise to them. These bad apples forged documents required by banks and the Small Business Administration in order to qualify for the loans. One common forgery: payroll tax forms submitted to the IRS. And too bad for the fraudsters, because it's an easy thing for the government to cross-check with the IRS to see whether the applicant really filed the form and paid the taxes. If the applicants were convicted felons or out on bail and ineligible, well, they got around that too. Some of them stole the identities of family members or legitimate business owners they knew and made PPP loan applications in their names. But the biggest crime was not using the money as intended to keep small businesses afloat. Instead, that money went to extravagant personal shopping sprees. And oh, did they spend. They splurged on expensive sports cars, Lamborghinis that retail for hundreds of thousands of dollars each, Bentleys, Ferraris, Mercedes, Porsches, Land Rovers, Teslas, Cadillacs, F-350 trucks, and luxury SUVs. And then there were the boats and yachts. One defendant splurged on a 40-foot invincible catamaran for $689,000, while another bought a Pavati wake boat. Others bought new houses and condominiums. Credit card payments, back child support, and mortgage payments ate up more of the funds. One defendant put a down payment on a swimming pool for his family home, and others did home improvements. But perhaps the most brazen use of the funds was the cash. One defendant had a wad of $10,000 in his pocket when arrested. Another filmed a rap video of himself, flashing $100 bills, and posted it online for the world to see. And don't forget about the casino runs. One defendant was caught on film at the blackjack table at the Bellagio in Las Vegas. Another blew $60,000 at the Hard Rock Hotel and Casino in Miami. Still other fraudsters spent the money on visits to strip clubs, shopping extravaganzas for luxury goods like Dior, and risky stock market trades. Just who are these PPP fraud defendants? The answers may surprise you. There was a Hollywood producer who had once produced a film starring Matthew McConaughey, and a reality TV personality from the show Love and Hip Hop Atlanta, even a pro NFL football player. There are others you might never have guessed. A doctor was charged, a practicing attorney from New Jersey, software engineers and CEOs of tech companies, 2 high school coaches, even a former employee of the Catholic Archdiocese of Washington, D.C. Among those charged were regular business owners, too. A funeral home director, the owner of a private investigation service, a handmade soap entrepreneur, an auto repair shop owner, the owner of a roofing company, and the owners of a chain of nail salons. The numbers will shock you. Not all were individual crimes. Several fraud rings were busted, at least 7. The largest involved $24 million. Over 140 defendants have been charged to date, and some of them knew the jig was up. They fled the country, or tried to. A husband and wife were apprehended at JFK Airport, allegedly trying to flee, just like in a TV show or movie. The total fraud involved over $341 million through the end of January 2021. Luckily, they didn't get away with it all. The feds have seized many millions of dollars of assets, including luxury sports cars, bank accounts, and cash. But some of the money is forever gone, squandered on luxury purchases, like a 5.73 carat ring, one Tuscan-style mansion, several homes and condominiums, 3 expensive Lamborghini cars and at least 2 Bentleys, and many other vehicles, even a Cessna plane. Apprehending these alleged white-collar criminals was a team effort among law enforcement officials and inspectors from various federal agencies: FBI, IRS, Secret Service, U.S. Marshals Service, Postal Service, Office of the Inspector Generals from various agencies, including the SBA, FDIC, and Treasury, and more. The crimes are prosecuted by the U.S. Attorney's Office of the Department of Justice. So what about today? Can we conclude the PPP program was a success? Even with this headline-grabbing fraud? The resounding answer is yes. The program overall has helped 5 million small businesses. Too often, small businesses don't get the bailouts and federal money that large corporations do, so this was a unique program. The vast majority of the small businesses applying got PPP loans legitimately and are using them appropriately. The PPP program was an essential lifeline for millions of small businesses during a national crisis that otherwise could have proven fatal to many companies, despite some bad apples who could spend time in prison and years paying restitution. For more details, visit our comprehensive article outlining each publicly announced case to date at the link in the description below.